Good afternoon, welcome to GrainTV. My name is Cody. Today is the 28th and we had the market moving lower here. Let's turn it over to the Grain Hedge iPad trading platform, see where we closed off the day. Corn down 7 cents, soybeans down 3 3/4 cents, and wheat in Chicago leading the charge to the downside here today, down 13 3/4 cents, especially after this huge sell-off that we've seen since December 26th. We did have ethanol production out this morning. Let's take a look at the numbers here and see where we came out. You'll notice ethanol production declined 1,000 barrels per day. That brought overall production for this week down to 978,000 barrels per day. This is still very positive. Notice the last 3 weeks, when you look at this chart, the green lines represent weekly ethanol numbers. You can see here the last 3 weeks have been very strong in a time when typically we would see ethanol production declining. Now, we have seen overall crush margins decline, but one of the main reasons why crush margins continue to hang in there is because DDG prices have been very strong. They've really outperformed relative to corn. As soon as we got those DDGs approved there, those MIR 162 genetically modified seed varieties being approved over in China, that really opened up a lot of demand here and helped cause a real sharp move here in DDGs, in the DDG market. So the bottom line here is that ethanol continues to run ahead of pace. Ethanol production up about 5.6% over last year. USDA is only factoring in about a 0.8% increase, so we are ahead of pace. If you would expect the USDA to be right, if you are kind of banking on the USDA numbers being more accurate here, you would really expect a sharp slowdown in the second half of the marketing year. We just haven't seen any signs of a slowdown yet. We're going to be paying close attention to this report as we move through the weeks here to come. Let's talk a little bit about ethanol stocks, because this is a number that's released in this EIA announcement every single week. You'll notice ethanol stocks were up 244,000 barrels here to 20.63 million barrels. So take a look at this chart. This chart takes into account the last 5 years of EIA numbers. You'll notice that I have here on the orange the high side of the range, so the high side of stocks as we move throughout the year, where ethanol stocks have been the absolute max in the last 4 years during these weeks. You'll notice in the blue line is the minimum ethanol stocks during these weeks, and the average ethanol stocks that we typically see over the last 5 years is the gray line. So one line I want you to pay close attention to is the yellow line on the very far left. Of course, we're only a couple weeks here into the 2015 year, but you'll notice that this week we're actually have the largest ethanol stocks that we've seen. This is the maximum ethanol stocks that we've seen for this week in the year, and the bottom line is that very well could weigh on ethanol prices here going forward, and that could very easily weigh on ethanol production, of course. Let's talk a little bit about the price action in corn today, because it was very disappointing. You know, there was a lot of expectations here that support around 376 would hold. You can see I have two charts up here. The first is the left chart. That's the daily chart. This is showing you a candlestick chart of the daily candlestick chart. Each one of these bars is representing 1 day worth of price activity, and you can see that support level, that 376, which held, was retested again today. And when you look at the 5-minute chart, this really gives you an idea of intraday price activity. You can see that we traded lower down to that support level about early part of the morning, and then we started rallying off that support level. We were unable to hold on to that rally, cupped back over the lows, retested that support, kind of consolidated there for a few, quite a bit of time there. And then we finally broke through. And when we broke through near the very end of the day, we had a pretty significant amount of volume compared to the volume that was traded throughout the rest of the day. It was a very sharp move, and it was very disappointing, because now what we have is a situation where corn is truly in a bear market, where we have these lower lows and lower highs. Really, that beginning of that trend really was established there in the later part of December. So a little bit disappointing price action there for corn. I think a lot of it was dragged down by wheat, which was the leader to the downside. It's been an absolute dog when you look at prices and its price action over the last few months. You can really see that there's a desperate need for export sales, a desperate need for a pickup in export sales. The export curbs that Russia has had have not seemed to provide any sort of additional export sales here for the U.S. And of course, the U.S. really needs to start picking up export sales to get a little bit of a bid under this market. You can see it's just not been very positive there for wheat, continuing to make new lows. Now, when you look at soybeans, this is kind of interesting. When you look at soybeans, we're also consolidating right around that 970 area here. We're going to be watching export sales very closely tomorrow, and we'll get to the export sales expectations here very shortly. But we're going to be watching these export sales very closely because, of course, over the last 2.5 weeks, we've seen 3 export cancellations. Now, we have seen additional sales added on to that, but last week's export sales were very disappointing, only booking 14,000 metric tons. Expectations were between 500 to 700,000 metric tons. So it was very disappointing week. We're going to find out whether or not that's a flash in the pan last week and we have more export sales this week to show the market, or whether or not this is the beginning of a trend here where sales start to dry up and cancellations become more and more prevalent. Let's take a quick look here at export sales. Keep in mind that this is a report coming out at 8:30 Central Standard Time. You'll notice corn here, or excuse me, 7:30 Central Standard Time. The expectations for corn exports is between 850,000 metric tons and 1.2 million metric tons. You have expectations for soybeans anywhere in between 200 to 400,000 metric tons, and expectations for wheat between 250 and 450,000 metric tons. We'll see if any of these numbers here provide any sort of support for this grain market, which really is having a difficult time gaining traction. If you have any questions about what we talked about today, give us a call. Number's 877-472-4607. And remember, Kevin McNew is going to be speaking at a grain marketing update there at the University of Maryland. This is going to be held at the Chesapeake College in Y Mills, Maryland. If you are interested in going to this, go ahead and email Shannon Dill. She'll sign you up, get you registered for the marketing update there on the East Coast. Thanks a lot for tuning in. If you have any questions about what I talked about today, give the office a call. Number's 877-472-4607. Thanks a lot for tuning in. We'll see you here Thursday for the Export Sales Report.